around about 1.6%. So what's going on in this part of the world? Let's get an expert who actually tracks both markets. Jonathan Schiessl, fund manager at Ashburton, now joins in. Jonathan, good afternoon. That's really the big question, since you track both China and India. What's taking place? We've seen a big decline in both markets today, and in case of India, this decline has lasted for last 4 or 5 days now.
Yeah, I guess some people might be slightly surprised with the move in China because we had some further policy easing announcements on Sunday. And obviously India's been under pressure for a little bit longer. I guess there's many factors that are pulling India down. I think China certainly is one of them. China up until today had been a very strong performing market. And it's interesting to note when you see the liquidity in the domestic indices in China at $290 billion, a new record. It is just, obviously quite dwarfs India from a turnover perspective. But, I mean, what are the factors at play? Maybe there's some disappointment that there wasn't more easing in China, and that sort of drifted into India today. There are perennial bears out there with regards to China, and they're now getting worried that this easing we're seeing could be indicating that the growth slowdown is a lot worse than many people had feared previously. There are multiple reasons. We're still reasonably comfortable, if I'm honest, about both markets' outlooks in the sort of medium short term from here.
So are you still a buyer in Indian markets, Jonathan?
Most definitely. We certainly would be buying India on weakness. We are talking to our clients as we speak. I think probably India is one of the, obviously this whole MAT and this tax issue from a foreign investor perspective doesn't help matters in the short term.
Sure.
And obviously, as I said, in the short, maybe there is some short-term money that might be coming out of India going into China just for the moment. But as far as we're concerned, the factors that we liked about India, haven't gone away. Just perhaps the issue is in the very short term there might be a lack of incentive, the lack of, obviously corporate earnings aren't helping with TCS, and that's another sort of short-term cloud. But we're certainly not expecting corporate earnings to be wonderful for some time longer. So we're sort of, as I say, we're very comfortable with the outlook for India here.
Okay, so while the reasons for why you like India haven't changed, what you like specifically in India, has that changed? Last we checked, you were overweight financials, consumer discretionaries, and industrials. Are those areas that continue to receive investments from you, or have you sort of rethought some of those strategies? For instance, pharmaceuticals looks a tad bit better priced now than it did, let's say, a few weeks ago. Would that interest you at all?
Yeah, so we were having a look at some of our pharma names. That sector's been extraordinarily strong on a longer, medium, short-term view. Yes, it has come off in the very, very short term. They are reasonably expensive, some of the counters. I think overall, we still probably prefer to be slightly more domestic, so we haven't changed any of our overweights for any of those sectors you've mentioned. But we are certainly, in certain areas with this market correction, there are some counters which are beginning to look a little bit more attractive to us, particularly if you view things slightly more longer term than next week.
Okay, IT you mentioned, TCS earnings, sort of putting a cloud on the sector, so to speak. I'm also referring to, I think, Infosys is one of your top holdings. How are you looking at IT here on? Jonathan, what will it take for you to want to come back to the sector in a big way? Or is it that you're being very stock-specific in the sector and staying away from stocks like TCS but preferring some of the mid-cap stocks?
Yeah, again, we haven't changed our names for some time. We haven't, the reason we're not in TCS, we haven't been for a long time, was back in the day it was valuation, and we found indices quite compelling. I guess that valuation gap has narrowed somewhat more recently, but it is more. We hold IT for a number of reasons. Yes, we do prefer some of the mid-cap names where you see a little bit more value there, but also as obviously to keep the portfolio as an overall portfolio level, we do like the fact that we have some of the companies that are geared into external growth elsewhere in the US or Europe, and obviously IT and pharma fall into that, and that does provide us with a natural hedge to a degree as well for the portfolio with what goes on with the rupee as well. So, we're unlikely to go further underweight to either of those sectors, IT or healthcare, but I'm not sure quite at the moment where, with all the uncertainty in the global economy, that we'll be pushing those weights up either, on the other hand as well.
Okay. Jonathan, financials have corrected quite a bit, and prominent names like ICICI Bank, Axis Bank, HDFC Bank, HDFC itself. Is there anything that you would like to add positions to now at current rate?
Probably not. I think all the financials, although the market says that when we didn't get the interest rate cut a few weeks back, I think there was some disappointment that's crept in, particularly that's hurt the financial sector to a degree, and obviously a lot of the banks have been encouraged to drop their lending rates, particularly with the statement from the governor after they didn't cut rates. So I guess people are worrying about interest margins in the very short term. But these things haven't come back too far. We're still very overweight as such financials within the portfolio, and we're not inclined to really change our positions for the time being in the names that we have. So no, we're not planning on changing our overweight there. We're still comfortable, and actually with the CPI data and the WPI data that's coming out, I guess the chances are that as long as we get a good monsoon, those cuts should be coming through in June, I guess.
Okay, a quick final question then, Jonathan. What announcements or key triggers will prompt your buying at this point in time to become concerned about the Indian market? So will it be a precipitous fall from here on? Will you still be a buyer despite that? Will it be some political developments that might actually turn you off the Indian markets? What will it take for you to start getting concerned about these markets?
So I think for us, what's going to probably be the final trigger for actually increasing our weightings to India will be valuation and where the index comes back. If we see this correction carrying on for a little bit longer, then we'll certainly get more interested in.
Okay.
Politically, that's a very difficult sort of area to track, and as far as we're concerned, the cycle's turning. What we see, the revival in some of these stalled projects from the investment perspective, that to us looks pretty good news. We think the investment cycle will, revive as such overall, but we're at the early stages of that. And then the last piece of the puzzle is earnings. Now, as I said previously, we're not expecting earnings to recover this quarter. Probably earnings will start recovering in the last quarter of this calendar year, if not the next quarter after that. So, but of course, you start to factor in those earnings, at least 6 months in advance. So for us, we're quite comfortable if the market comes back here that we don't need necessarily political developments to push it on. Yes, if there was an announcement on GST or there's some more clarity on the whole land reform bill coming through, which still looks quite clouded, then yes, that might certainly prompt the market to move up higher in the short term. But India looks quite attractive even without these factors at play for us. Obviously the revival in the economic growth rate, inflation coming down, interest rates coming down. We believe India looks pretty well placed as it stands without those political developments necessarily coming through in the short term.
All right, Jonathan, we'll leave it there. Thank you so much for joining us this afternoon. Thank you for those insights.